Hi guys, I hope everyone is doing well and so let's start. Let's talk about the week ahead and what I think about the markets currently. So again, I've opened the chart of Dow Jones Industrial Average in front of you. Um, so just a background story in a nutshell. What happened 2 days before, or like 2 to 3 days before, is U.S. So the debt ceiling, the crisis which was going on about the debt ceiling. So the debt ceiling has been increased recently, and the U.S. markets, as you can see, it is all in green, like 1%, 1.5%. So this is the action which happened on Friday. So because of the good news on Friday or Thursday, I don't know, I'm confused. Just check the dates. So because of the good news of increase in debt ceiling, the markets have rallied. That's what I believe. So in the past videos of mine, I spoke about the bad market breadth in the US. I still continue to believe so. I still continue to stand up with my analysis because it has still not have been proved wrong yet. However, I just wanted to come in today and bring what is happening in India to your notice, because I believe that we are the one of the best markets around the world. We are the one of the best outperforming markets in this 2023. So I spoke about bad market breadth in the US, which might ripple down to India. But I just gave a thought about this in last week. So the thought was, if India is the next big story in the globe. So what what might happen that we keep outperforming, or what might or like giving a thought about India from our economy's perspective. So as you can see that Nifty is currently almost at its all-time high, and Bank Nifty is at its all-time high. Nifty is not, but Nifty might go there. So coming back to the topic, bad market breadth in the US that I had already discussed. I just wanted to show you that the market breadth in India is certainly quite good. I was seeing our mid cap and small cap index chart. So the small cap have just broken out of this resistance of 10,167 approx, and the mid caps are already doing an all-time high. So the point I want to make here is that our markets are quite comfortable, and if US also starts to like cope up, or in my terminologies, or what I've speaked of in the past, if US also starts to show signs of good market breadth, which it showed on Friday. For example, I just wrote on my Telegram group on Friday that Russell 2000 has given some kind of a breakout, and this might be a sign of good market breadth. Again, this is the chart of the smallest 2000 companies in the US, and I was thinking that it might break down, and we might lead to another leg down in the US markets, and which might ripple down to India. However, this has not been the case. Russell 2000 has broken out. There is a good news in the market that the debt ceiling has been increased. So this is leading the market up. So removal of debt ceiling also means that now government have enough money to spend for the next few years in the market, and this might, what I don't know if it will happen or not. This might lead to more inflows of money when there is excess cash in the economy. It might lead to more inflows of the money into the markets, like it happened when Donald Trump was the president of America, and he printed few trillions of dollars, and it led to a bull rally in 2021, I believe. So this might happen again, not in this year, not in the next year. I don't know. It might happen tomorrow also. It might start happening tomorrow. I don't know when it's going to happen, but I'm just giving you a different perspective of the markets. Like I was telling you guys about the poor market breadth in the US, and this is not a bull market. But we can also consider this as a strong analysis, that our short view on the markets, our bearish view on the markets might be wrong, and we might see a completely different thing happening here. And let me tell you, if US starts to perform, I don't think Indian index will stop from the point where they are. Bank Nifty is already at all-time highs. It might make new all-time highs from here if the US market does quite good from here. I told you guys about this channel. This has still not broken out, but I'm I'm not here to talk about like what is going to happen in the markets tomorrow. I'm just giving you guys what I think of the markets in a longer term, so you can place your intraday trades accordingly. So this is the weekly charts of Bank Nifty. We are currently at all-time high, and if the US market starts to do well, we might go to a all-time high, as we are near the resistance itself. And this is likely to happen only if the US starts to support us. It has showed some good rallies on Friday, but that rallies which happened on Friday should sustain in order for the markets to go up. It shouldn't be sold into when the markets open on Monday. So give it a watch. Keep a track of the US markets as well. So this is the sign of Nifty. If the markets continue to go higher, we can get a target of this trend line again, approx 19,050 levels or 19,100. So we can come here and test this trend line in Nifty, and Bank Nifty has an open sky. If it wants to go higher, it can. So we are at currently 44,000. we might see rallies of 500 points. For example, we might see a next target as 44,500, then 45,000, and so on. So that's what I wanted to come in and say today. I have some few picks in mind. I just also wanted to give you guys cutoff levels. So we will not be long if 43,000 or 43,500 on Bank Nifty is broken. This level is pretty strong, as this was the higher low. If market breaks down below 43,500 or 400 level approx, this low, we won't be long on the markets. But if it is breaking out tomorrow, don't be surprised to don't be surprised or don't be what do you say, scared to go long on the markets. You can easily go long as the global market shows signs of strength. Also have a watch on Nifty. So we won't be long below. I think let's take something. So we won't be long below. mm, let's take this. So if the market goes below 18,400, I don't think we should be long on the market. We should be watchful then. But now if the markets are already opening gap up tomorrow, like for example 88 points, Bank Nifty might open around 160 points, so double the points of Nifty. So if there is a continuation to the gap up tomorrow, don't be afraid to go long on the markets, as the global markets are strong. And don't be afraid to go long. This chart has been one of my favorite charts at the moment, because I have this conviction of going long, because I've seen a breakout on Russell 2000, which is the small cap index. So now if the small caps also start supporting the broader market, for example the S&P charts of S&P 500, I think the market breadth might get better in the US, and we might lead to a next bull run in the markets. We might, and we might not. uh, S&P 500 is near a very crucial resistance currently. It needs to break out of this 43,000 level on a daily closing basis in order for it to go higher. I just want you guys to keep a track of this chart as well. It should cross this crucial resistance in order for the markets to stay bullish. US 100 again, I don't care about it much, but keep a watch on S&P 500. And just a chart. So I see dollar getting strong here. Generally, it is bad for our equity markets, dollar getting strong, but this might also be a sign of dollar getting strong because of the good news which has happened on Friday. So the debt ceiling has been increased. That's why the dollar has been showing signs of getting stronger. So yeah, that's that's all for today. I don't want you guys to. I have some stocks for you guys to watch, which are quite important for me. The one is DLF. If the markets continue to be bullish, I would like you all to go long on this stock. It has already broken out of this flag kind of structure on Friday on a daily closing. If it is showing signs of bullishness tomorrow, you can easily go long and get this target of 520 in 2-3 days or a week or 2 weeks. I don't know, but you can actually get this big target of almost 6.5% if you go long on this chart. I also see this stock as a investing opportunity, so you can take positions as well, like according to your risk appetite. Also, this chart, if you guys are aware of a cup and handle pattern, it is a quite significant pattern. So it has just broken out of its the trend line, which is coming from approx 2008, which is quite significant. And I see a target of 800 approx if this pattern works on this chart. So this 489 stock might go till 800 in the coming months if this pattern is successful. And given that the overall market is bullish, then I would like you guys to stay long on this stock. If the overall market is not performing good, I don't think this will be a good bet then. But currently, overall market looks bullish, so you can easily go long with a small stop loss of 456. That is hardly something hardly what. Let's see. If we take a stop loss of even more conservative stop loss of 435, that's just 12% when compared to 81% of return. So you can plan your positions accordingly. So I just wanted to show you, teach you guys one formula. So for example, you have a capital of 1 lakh rupees and you want to invest in DLF. We are currently at 489 and we have a stop loss of 435. So 489 minus 435. So this is a stop loss of 54 points or 55 points, like you see here on the indicator. So just a quick formula. So how do you calculate your position sizing and how do you control your risk? Let's say we limit ourselves to 2% of the risk of our capital. So 2% of 1 lakh is 2000. And I'm assuming that your capital is 1 lakh rupees. You can apply it to your scenario, like alter it to your personal capital, like apply this formula. So 2000 is 2% of your capital. What I'm assuming is 1 lakh divided by 55 or 54, whatever is our approximately 2% of our stop losses. So this value which you are getting, 37.037, ignore it. So the 37 value that you're getting is the amount of shares you can buy and stay invested in DLF so that you incur only 2000 loss in case your stop loss is hit. So if you buy 37 shares and your stop loss of 55 is hit, so you will incur almost 2000 of loss. So that is how you calculate your position sizing. That's all I wanted to teach you guys for today. Also, just a quick observation, VIX in the global VIX on the US markets is pretty low. India VIX is pretty low, and we are seeing rallies on the market. This means that the rallies we are seeing in the market is authentic, and because it is happening on low VIX. So VIX is generally a indicator of fear in the market, and when the markets go up, we want the VIX to stay lower, which is a good indication. I want you guys to do your own research on VIX and read more about it. So lower VIX, market going up, a good case. So just to explain you a bit more, if you are short on the markets and the markets are falling and VIX is rising, generally it is good for you, because increasing fear is a good indicator when the market falls, and low decrease in the amount of VIX or decrease in fear in the market and markets going up is a sign of good rallies, and that is how you can correlate everything and take your trades. So I think that's all for today. Cheers guys, thank you.